Okay, so you're thinking about your first fundraiser. That's a big step.
Yeah,
You're probably already looking at all the different ways you can get that money,
right.
angel investors, VCs, maybe even crowdfunding. But there's something else that's just as important,
Oh, what's that?
valuation. Like, how do you actually decide on a number that's going to help you succeed without causing problems later on?
That's the million-dollar question.
It really is. And today we're going to dive into that with some insights straight from seed venture capitalists.
Oh, this is juicy stuff.
It is. And they had some things to say that honestly surprised me a little bit.
Like what?
Well, they were saying that getting the highest valuation might not always be the best thing.
Yeah, that's a hot take.
It is, right?
Yeah,
Like, you would think as a founder, you'd always want the biggest number.
makes sense.
But these seed VCs are really emphasizing thinking about valuation strategically.
So it's not just about the money.
Exactly.
Yeah.
So can you break that down for us?
Mm.
Like, why wouldn't a founder want a huge valuation right away?
Okay, so think about this. You get offered $1 million for 40% of your company.
$1 million.
Sounds pretty good, right?
Oh, yeah.
But then down the line, you need more money to grow.
To like really scale up.
Yeah, and now you only have so much of your company left to offer.
Because you already gave away 40%.
Exactly. And that might mean missing out on investors who could be really valuable.
Like they might have connections or experience that you need.
Right. And giving up too much equity early on can really limit you.
Even if it comes with a big check.
Exactly. It's called dilution.
Dilution.
Yeah, you're diluting your ownership.
So it's like you're trading short-term gain for long-term potential problems.
That's a good way to put it. Plus, a really high valuation can put a lot of pressure on you.
Pressure. How?
Well, now you have to meet these super high expectations.
To justify that big number.
Yeah, and that can push founders to make decisions that aren't good for the company in the long run.
I've actually heard from founders who said they felt trapped after taking a huge valuation too early. They felt like they had to make choices just to keep their investors happy, even if it wasn't the best thing for their business.
Yeah, that's the kind of situation you want to avoid. And that's why a more moderate valuation can actually make things easier.
Easier how?
Well, when you go for your next round of funding, investors will see that your company is growing steadily.
Not like some crazy rocket ship that's about to explode.
Exactly. It shows them that your business is on solid ground.
Makes sense.
Yeah.
It's like you're setting realistic expectations.
Right. And investors like that.
It's like that saying, dress for the job you want, not the job you have.
I like that. And get this. Startups with more conservative valuations in their seed round actually have a 30% higher success rate.
30% higher.
Yeah, 30% more likely to get to that next round of funding.
Wow, that's a big difference.
It shows that it really pays to be strategic and think about the long game.
And it's not just about the money, right? It's about staying in control of your company.
Absolutely. If you hold on to more of your equity, you get to have more say in what happens.
You have a bigger voice at the table.
Exactly. And that's what founder equity is all about.
It's about having the power to shape your company's future.
And if you give away too much of your equity too soon, you might end up feeling like you're not really in charge anymore.
I can't even imagine building something amazing and then realizing I don't really have control over it anymore.
That's going to be tough.
It would be heartbreaking. So the takeaway here is that valuation is more than just a number.
Yeah, it's a decision that can impact your company for years to come.
It's like choosing the foundation for your house.
What do you mean?
Well, you need to make sure it's strong enough to support everything you build on top of it.
Oh, I see what you're saying. That's a good analogy.
So for all you founders out there thinking about your first fundraiser, remember that valuation is a big deal. Don't just grab the biggest number. Really think about what's best for your company in the long run. Do your research, talk to people you trust, and don't rush into anything.
That's great advice.
What valuation is going to help you reach your goals and still let you stay in control? That's the question you need to answer. And this is just the beginning of the conversation. There's so much more to learn about valuation and fundraising. So keep exploring, keep asking questions, and make sure you're building your company on a solid foundation. That's going to set you up for success, both now and in the future,